Well, hey. We're here for Market Mondays. Market Mondays. We're here for Market Mondays. We're going to check out what we already have open. We'll update these trades and then we'll see about putting on some new ones. Remember, always, none of this is financial advice, right? I'm not a financial advisor. I'm just here to assist. I'm just here to assist. Pass the word on to your friends. Pass the word to your peoples. Let them know that we are on. I'm trying to share this onto my Facebook group, but it doesn't look like it wants to do that. So we'll just be here. We'll just be here where we are. Um, Let me stop the YouTube music so we can get going. Hey, everybody. It's Monday. The market opened up today doing its thing. SPX kind of consolidated here and here. It didn't really do a whole lot. Let me go look at the chart to make sure it like opened around 41 and some change. Where'd my thing go? It opened around 41 and some change and it closed about the same place. Yeah, our open and close today was not anything tremendous. It was a green day. We opened and went up, opened around 41.37 and we closed at 41.51. So what's that? So 14 points. We closed about 14 points higher than we opened. Not very much, is it? I have to work on and getting my lighting brighter, getting brighter light so it don't seem like I'm sitting in the dark because I'm not. I'm not sitting in the dark. Okay, you all, let's look at what we have so far and what our trades were from last week. The ones we closed some on Friday. I hope you didn't, well, you might have missed it, but if you didn't see it, maybe you went back and watched it again. But on Friday, around noon time, I went live to update us on the trades that we had going last week. And closed those, closed some, opened some others. I don't think we opened anything. We closed some, saw what was going on. I want to make sure that I'm presenting properly. We're going to present, then we're going to share our screen. Yes, we are sharing our screen. Okay, allow. Open up the trading platform. I'm a fan of TD Ameritrade. There's other ones. I'm not saying it's the greatest per se, but it's the one I use and I like it. Take it. I like it, so it works for me. Let's look at what we have so far. We've got AI that we opened a little while back. Actually, a couple weeks ago, we opened AI. It is set to close this Friday. This put credit spread is 27.28 put credit spread. At this point, it is fully breached because current price is $22. So when you have a put credit spread, you need price to stay above your short leg, which the short leg here is 28. Our price is much lower than that. Remember, when you have these spreads together, the max loss of this spread is only the width of the spread. So if you got 27.28 as your spread width, which is 1 times 100 shares, is $100 is the maximum you can lose. You're not even losing $100 though, because when we first entered this trade, we collected $35. 185 minus 150 means we collected we collected $35 when we entered this trade. So our max loss is the difference between that and the $100, which is 65. So we at this point have lost their money and our money. What can we do though when you have a put credit spread and it's not doing what you want it to do? And we're gonna look at the chart here in a second. You can see if you can anticipate the price really going up above this 28, or is there some other mitigating trade you should do? So we've got AI. Let's go look at the chart on AI to see what we may be able to do, maybe to put another trade on so that way we can make some of our money back. You could also always just decide you're done with the trade, take your $65 loss, and make your money up in other places. Sometimes it's not, you don't have to try to salvage a trade that's may or may not do. But now that AI trade doesn't close until Friday. The question is, do you think it's going to go back above 28 between now and Friday? Mm, could it? Of course, everything could happen. Yeah. So we're looking at it. It is down here in the support area. The price is down here in the support area, and it needs to go up from here up to about 28, which would be $4 or $5. Well, the daily ATR, I don't believe is that much. We got 3 or 4 days. We could though pick another put credit spread up higher. I mean, sorry, down lower because we're price is lower here. If we looked for a put credit spread, maybe down here in the underneath this support area, I see support down here at 20. What's this? 21 and some change. So if we wanted to look at how could we put another put credit spread on, basically consider the last one. Um, and at this point, it's at max. Also, I'm saying you can consider the loss, but there's nothing to really do with it at this point. But wait and see if the price goes up. So I'd leave them on because honestly, when you're selling, the trade isn't a bad trade until the expiration happens. So that money um is unrealized. It's an unrealized loss, and I just usually, if I'm all the way at max loss, I'll just leave mine to run until the end, just in case some miracle happens. Sometimes, sometimes you get a miracle. But let's look at what would we do if we wanted to do maybe 2021 on a put credit spread. We're using this Friday. We're using our support. If we were looking at 2021, oh, there's not any money there right now. So if we were to do this, we need 2021. As far as this goes, there's about $10 of credit. That means we could get about 10 of our dollars back that we lost out of the 65. That's one way to do that. You definitely want to make sure that if that's what you're going to do, that you strongly believe it's going to stay above that price, because you don't want to put another $100 trade on or $100 collateral trade on and then have the price come through here. So you want to do good charting to make sure you feel comfortable that it's going to stay above this line between now and Friday. All right. So that's what I see with the AI trade. We're just going to leave it and let it do its thing for the rest of the week. I'm thinking about the 2021. I got to decide whether I'd want to put more money into AI or not. That's what you have to think about. Do you want to put more money into the trade or not? All righty. Let's look at AMC. AMC is where we have our covered call, and honestly, this should only be one of them. So we took in $20, and the mark right now is 9.5, which means we're at a 52% win, 52% profit here. So I closed them about 50%. So I'm good with that. I'm going to right click on it. Right click on this one, create closing order. We're basically buying back. We sold for $20. They gave us 20. We're going to buy it back for 10. And that's 50% profit. It releases your collateral, releases your shares from being part of the cover. And then what you can do is go back and enter another trade, maybe a subsequent date or same date with another strike. You can go and decide that that's what you want to do. All righty. So I put in the order to close off the AMC covered call. I put in the order to close that at this point. So tomorrow we'll look at reopening another one. That'll be another strike or whatever. EOSE, EIEIO. EOSE is also a covered call situation. We have 2.5 strike covered call is what we have in our trade. And we bought these shares at $2.19. If we allow them to be called away at 250, like we talked about the other day, we're going to get 31 cents per share. So $31 we'll get if we allow them to be called away on Friday at the 2.5 strike. Something else you can do, we'll talk about it on Friday, is something else we can do is roll this up to a higher strike and keep it going. Take in another credit and let it keep going and keep our shares and continue to collect premiums as we go. It's called rolling. we can roll. I'm going to show you here. If we right click here, it says create a rolling order. So you're going to create a roll, and it shows that it's set to close on April 21st. We could, EOSE only does every month. So I don't know if I'd want to wait another month with it, but you could, same strike. Maybe you grow up to a higher strike, which is 5, means now you're going to pay a debit to roll it. And if you're selling cover calls, I wouldn't pay to roll it. I just let my, maybe I'd let the trade go ahead and do its thing. And if they get called away, then you take your $31 that you made in profits off the stop and use it for something else. Or you can roll EOSE, keep the same strike, and collect $40 more in credit for another month of cover calling. You can do that too. That way you don't lose the shares. But we're going to do that. We're going to make that determination by this Friday. That'll be another one we'll look at again on Friday to see which one, what we decide. We may just allow them to be called away and then use our collateral for something else. Put our money someplace else. Okay. So we got First Solar here. First Solar. Oh goodness. Hold on. Let me send a message. Yes. Whew. All righty. Y'all can see my screen, can't y'all? All right. So First Solar, we did an iron condor. An iron condor is where you have a put credit spread and a call credit spread all in one trade, right? Same expiration date, put credit spread, call credit spread. This is called an iron condor. An iron condor. At this point, it expires on the 28th of April. The first half here, we collected $65 to get between these two. We collected $65. It's currently at about $50 is the difference between the two. So it's got not gotten enough premium for us to close it just yet. This is a about $24 on this trade. We can close it and get to keep to about $24. And on the call credit spread is worth about $80 right now, and we collected $90. So, actually, it looks like we collected $90, and it's worth about $80. So this one's still cooking. It's still baking. The price $218.89 is between these two. It's a little bit closer to the top than it is to the bottom, but First Solar, this trade is still doing its thing. And when it gets to the place where we can do 25%, take it off the table, then we sure will. We surely will. So if we take in $65, 25% of that is like closing it after about $15, $20 at the most. You can go ahead and close it, which is what we just said was $20. So we may be ready to close this one and collect our monies off of that one. Let's look at Google. We put this one on last week. The put credit spread 103, 104 on Google. Google is currently at 105.77. This trade is doing its thing. It's down about $10 right now, so it's not ready for us to close it just yet. It's probably because the current price is not too far away from our strike price, but this trade is still good. It's good right now. So the Google trade, we're just going to leave that one there. So we'll check it again on Friday. Riot. The peoples, I say, the peoples. Riot. We like Riot. YouTube. I'm on YouTube. Okay. Whoop. Send. There we go. Well, I sent it twice. Riot. We have a put credit spread we did yesterday, not yesterday, last Monday on Riot. We have a 10.5 put going there. And looks like it's ready 50%. We took in looks like about $13 a piece, and now it's worth about $5 or $6. So these can be set to close. They're at 50%, 53% according to our profit and loss. So I'm going to turn this on for a close tomorrow. Create closing order. We're going to buy it back. I'm going to change our $6 to $5 just in case we can get we can keep an extra dollar. I'm changing it to that. That means we sold to open. So we're going to buy to close. Whatever you do to open, you do the opposite to close. So if you sell to open, then you buy to close. That's how that goes. The SI, the Silvergate trade. This is one we did first week, which is maybe about a month ago now. Still, it expires on the 28th of April. We received $15 for this covered call, and it's now worth 12 or 13. So it's not quite ready to close just yet. So we're going to leave it for a little while longer. Silvergate is just kind of hanging out around the price. We have a 2 call. So as long as it stays below 2, then our trade is doing good. It's doing swell, as they say. UAL, I'm not sure. We bought. I don't know if I put in an order to sell a covered call. I noticed here we bought the $42 shares and we're at 42.38. We need to do a covered call on the United Airlines. Or did we close those off last week and then needed to open a new trade? I think that's what happened. Okay, so let's look at United Airlines. I keep wanting to call it Universal something. I don't know why I want to call it that. So United Airlines, looking at this week, let's put it on single. We're going to do a covered call. Remember, we paid $42. It's currently at $42.38. We need to cover it at a higher price than what we paid for it. Covered call, we paid $42. We can call it, looks like at 42.5. Maybe go up one more to 43. That means if we release our shares, we'll release it for $43. And we're going to collect $91 for covered calling. Now we're gonna do 10 because I have 1,000 shares, which is interesting. Definitely know when you're in Sim, you got 1,000 shares, of $42 stock. That's coming into the future. So you've got I'm gonna sell 10 contracts at $91. I'm gonna put this as good to cancel. So tomorrow when the market opens, it'll pick up. We're going to collect $91 for a covered call on United Airlines. It's going to expire this Friday, and we're using the 43 strike. We have United Airlines stock at $42. I'm going to cover call it at 43. That's the plan there. It'll pick up in the morning. When the stock market opens, it'll pick up. We turned on Zim. This is what we did on Friday. Actually, we picked this coming Friday as an expiration for our Zim shares. We did a cover call on it. We collected $26. It is now currently worth $17. This one's already ready to close already. Alrighty, we could really just close this off. I'm going to put the order in to close this covered call because we close it about 25, 30%. We can close it on up. Okay, so what did this go down to 15? Yeah, let's go take it down to 15. It said that it's at $17 or it was when the market closed. So I took it down to 15. So when the price gets down to $15 instead of $17, it will pick up and close. Yes. Okay. So that's the update on all the shares and all the trades we have going from last week, right? All our Market Monday trades from last week. So now this week, the market is showing some strength and we can do some put credit spreads that can expire this coming Friday. We're going to do some put credit spreads again that are closing this Friday because the market is showing some short-term bullishness. So let's look at 3 or 4 trades that we probable trades. Remember, this is not investing advice. I'm just pushing out there and saying, take a look at this. All right, take a look at this. So let's look at NVIDIA first. Looking at the chart, I stay on the daily chart to determine support areas or resistance areas, especially when I'm doing credit spreads, because you want to know where price won't come to. You're looking for where price won't come to. So let's look for a little support here. I see a couple of dips. We got a dip, baby dip. So right here, I see 2 areas right here where this has provided some support. That is 263. 263 is an area. I also see another level of support right here at 255, but I'm not going down that far for this week. I'm not going to go down that far because we've come out of this supply area, this support area, and it seems to be going up some. So I'm going to look at 260 as my short leg. 260 put credit spread as my short leg, okay? Looking at 260. Let's go turn it to verticals because we're doing a put credit spread. On a put credit spread, we want 260 as our short strike on the put side. So we've got 260 here, 257.5 is the 257.5, 260 is the spread. When you look at this, the difference of this is 2.5. That means this trade is going to use a collateral of $250, 2.5 times 100 shares, because 100 shares is in every option. That's $250 of collateral. And for this trade, we're going to collect $29. Actually, it's $41. Once you push the button, it gives you a higher number. But we will collect $41 as our premium for doing this put credit spread of 257.5, 260. Okay, so we're leveraging 250, subtract 41. So we're leveraging about $210 on our trade. And this is going to close this Friday. Closing this Friday. Now, could you get a little closer? Absolutely. Let's go look. I want to look on the single chart. So I want to show you how we incorporate delta sometime into what we pick. So the delta at this 260 strike for Friday is showing 17 delta. 17 delta means, in addition to other things, it means there's an 83% chance of success. 17% chance the price will get here, 83% chance of success. Those are pretty good odds. You could go a little lower, 11 delta, which is a 89%, or you can get a little closer. Get a little closer. I don't know about Arid Extra Dry. If you want to do a 30 or 29 delta, you can say 265, right? 265 could be it's a 30 delta 29 delta, which means there's a 70% chance of success. That's how you can use deltas to help you determine good strikes. I kind of like this 262.52 because that's a 22 delta, 78% level of success or probability of success. That would be good too. But let's stick with what we got. NVIDIA, we did 257.50, 260. That's what we did with NVIDIA. Now let's look at coin. Let's go look at coin. We can check out the chart. Still doing another put credit spread here. Let's go look and see what the coin chart looks like. All right, looking for support because we're doing a put credit spread underneath it. So we need some support. There's a gap here that coin is kind of in right now. It hasn't really filled it. Well, it filled it with as far as the wick goes. But when I look at gaps, I look at gaps being filled when the body of the candle has filled the gap. Right? That's me. I think it's a personal preference. Some people believe that if price action filled it, then they're good with that. I personally like to know that the body of the candle filled it, not just the wick part. So this is the top or the bottom of this gap, and this is a buyer's gap because it jumped up from here to here, jumped up, which is buyer's gaps. So I would say that there's some support at 66.26. There's some support there. If you wanted to go lower looking for support, you can go down here into the 59 range because there's also some support down here at 50 at the bottom of 59.44. There's some support there too. But let's go look and see what the prices are looking like for premiums. What kind of premiums can we get? Okay. So we were looking at 59. If we're looking at 59 as our strike, no, not 59. It wasn't 59. We were looking at 66, I think it was. Yeah, 66. And then we did look at 59. 66 and 59. So let's look at the 66 first. This is a one spread. 65.66 is a one spread on coin. And between now and this Friday, price staying above 66, you can collect $32 for that trade. Or if you wanted to go down to 59, now 58.59, you collect $8 for that trade. Safer, right? $8 while you leverage your 100. That means you got $92 of leverage. I kind of like to do 1 to 3 if I possibly can. So sometimes you have to get closer if you want to do that, but that can be dangerous. Let's switch over to single and see what our deltas look like to go with these strikes. So 59.60 has a delta of 12 here. If you wanted to go maybe a delta closer to 20, that's 62 strike. And a delta of 30 is a 64 strike. That's closer to where we were. We had picked what, 60, 66? Let's go back and look at 64 and see that's somewhere in the middle, less than 30, over 70% chance of success. 64, you're going to collect $23, or maybe a little bit more, $27 is what we'd collect on coin. I like that one, 64, 63. Put credit spread. I'm going to put that order in. For us, for our collective community, we're going to put that order in. We're going with that one. 63, 64 on coin. If you want to be a little safer, you can go down 60, 62, 61, 62, collect a little bit more than 10% collateral. That's another safe place to be, 62, 63. All right. You have to realize one thing you have to ask yourself, and I want y'all to look. I have a link. It's called Trading Strategy for You, and it's basically a way for you to look to see what is your trading strategy, because everybody has a different propensity. Some people are more aggressive with their trading. Other people are a lot more conservative. So when that's the case, you have to make sure that you're being conservative, so that way if you match your personality, you want to match your personality with your trade. Straight trading strategy for you.com is what I have, and it gives you a way to look at what strategy is best for you. All righty, so we did coin, we did Nvidia. Now let's go look at JD. I think JD had earnings here recently. Did they have them today or yesterday? Or are they coming up? What happened with JD? Let me see what this is. Earnings on 5/17. So they have earnings in about a month. Why did I think there was recently? Anyway, JD has earnings in about a month. Let's look at the chart. Remember, we're doing a put credit spread, so we need to know where is the support, and we need to be below it. We want to be a little below the support because we want to look for where price is not going. And the way we end this trade, the way we win this trade is expiration. The price is not at our strike, then we win and keep all of our premiums. As a seller, we get paid to enter. We don't have to pay money to enter. We get paid to enter. It's always good to get the money on the front side. So according to this chart, 36.87 is the support area for JD. I'll probably go to the bottom of this wick, and the bottom of this wick, the low is 36.45. So something below 36. Something below 36 would be something we'd look at. So let's go check out something below 36. I'm going to change it to the single chart so we can look at the deltas while we're doing this. 36 has a delta of about 12. That's safe. Up to 18, 36 and a half has a 18 delta. That's good too. That's good too. Okay, so let's flip it back to the vertical, right? We said 36 or 36.5. Not a whole lot here as far as premium. This is a 50-cent spread. We hadn't really talked about. Nvidia had a 2.5 spread, $250. Coin had a 1 spread, $100 of collateral. When you have a 0.5 spread, these trades only cost you $50. When I say cost, they don't cost you anything. They really, the broker blocks up your buying power for the amount of the trade until it's off. So it doesn't cost you anything. You just can't use the money on other stuff. So when you have a 50 cent or 0.5 spread, that means it's a $50 of collateral that's required. It's almost like putting down a deposit, right? $50 of collateral. But you can widen this and turn this into one spread. You can say 36.5, 35.5, and then this becomes, you get $10 of credit. You can do it that way too. You know, I'm a fan of staying down around in the singles area. We want to stay down around, 12 to 15, 18 delta, right? So let's stick with the 36.5. I like that. And turn into a vertical 36.5, 35.5. I'm changing this so we can make it a one spread. 36.5, 35.5. I'm thinking we might be able to get a few more dollars. So I'm going to adjust this price here in the credits area, and you can adjust it to whatever you want to. The market won't pick it up unless it's worth that. But that doesn't mean you can't ask for more money. We can ask for more, and if the market likes it, it'll pick it up. If it doesn't, it won't, right? And then tomorrow we can look and see what is the trade actually doing, if to decide whether you want to adjust it in order to just get in the trade, or you want to adjust it for more or less money. Totally up to you. You'll have to decide that. But we're just we're opening up the order now. So we can see, if we go to the monitor tab, you can see the orders that we have working. These are all the things we have working, the things we put on to say, well, let's see what this does. I wanted that riot. I need to change this riot to good till cancel, so it can run. It won't just shut off if it doesn't pick up tomorrow. Okay, we got one more trade we're looking at. One more. We're looking at AA, which is Alcoa. We're looking at Alcoa. Let's check out the chart here. Check out the chart. Put credit spread again, looking for some support on the Alcoa chart. I see support. Honestly, it's right up here where it is right now. It is in the support area, but if we went down one more, we'd be right here at 39 and 39.71. If you wanted to go a little bit lower, you can go to the next support area, which is 38.14. We're going to look at both these prices to see which one gives us reasonable amount of money in premiums for this week. Remember, this trade we're running is only for this week. We're running it till Friday. So we're looking at either 38 or 39. Let's switch over to the trade tab. See what the deltas look like on both of these. 38, we have a delta of 19. 39, we got a delta of 28. A little closer than it probably want to be, right? So maybe let's look at what 38 offers. Change this to vertical. What does 38 off? 38, 37.5. Again, another 0.5 spread. If we want to do this one, we can collect $10. So we're collecting $10 for $50 of collateral. That's not so bad. It's 20% return on your $50. That's not too bad at all, right? 37.5, 38. If you wanted to widen the spread, you can change this to 37, make it a one spread, and collect $17. It's like a 17% return on your collateral. You can do that too. This one will require that you put $83 worth of collateral on the board, because it's going to be the one spread, which is $100, subtracting the $17 you collect, right? Now, of course, you could change this to a 20, take it up to $20. It means you're going to take in a little bit more money, but the collateral is the difference between that and the amount of the spread. Okay, I'm going to delete this one because I want to go back. I think I want to take the 38, 37.5 for the $10. Do that. I'm probably going to change it, put a few more pennies on here. That'll cover the fees. That'll cover the fees for us. Yep. All this is only running till Friday. If price moves like it's supposed to, then they'll be ready to close even before that. Okay, so we did NVIDIA, Coin, JD, and Alcoa. We looked at those 4 stocks. Looked at those 4 trades potentially for this week, this coming Friday. Now, this is a good thing about when you're a seller, you can sell in closer time. The further time you go out, the more premiums you take in for that same collateral. That just means the trade probably needs to be on a little bit longer while you're doing that. But you collect more money on the front side. So if you're going to leverage $50 and you can collect 25, or you can, collect 20 or something like that, then you're leveraging the $50 for maybe a longer period of time, but you get the premium money right away. That's the good part. When you're a seller, you get the money right away. You get the money right away. Okay, in case you didn't know, the 4-week live coaching for newbies and beginners, those who want to learn how to trade our seller strategies, that is open. It actually starts on Wednesday. If you want to join up, head over to http educatortotrader.com and get in on that right away. Right away. If you're watching on YouTube, please go ahead, like and subscribe. We're trying to grow our channel. All righty. If you're with me on LinkedIn, this is our first time coming over on LinkedIn. Feel free to go over to YouTube and join me, or join me on Facebook in the group. Our Facebook group, Educator to Trader, is over there. I'm on Facebook. I'm on Instagram, Educator to Trader. On TikTok, Educator to Trader. I'm in all the places at Educator to Trader. I'm even there on Twitter, Educator to Trader. All right. So, do we have any comments? Oh, I think I've got some comments up here. Ooh, comments. Hey, Saeed, that you made it. Good morning. Good morning. It's not morning, but hello there. Hey, Chandel. 260 Microsoft. You want to look at Microsoft? Let's do a quick look at Microsoft. See what we can do. If we can see anything interesting on Microsoft for the week, we can do that. There we go. Screen 1. Is it picking up? Yeah. Let's go look at Microsoft. Again, this is not trading advice. This is, it says I'm sharing. Okay. This is me just offering some stuff up that might be of interest. Let's go see what the chart looks like on Microsoft. Okay, we've got some support here. A little bit of support at the, what's this, 282. There's some support. Let me see where I can move my support lines. Actually, there's one that's even up higher than that one. You've got some support even. Oh, come on. Work with me, machine. 2. There we go. There's support up in here. One of the ways you can find whether or not your support is in a good place is you can change the style from candles to a line. For chart type, you can change it to a line, and then you can more easily see your peaks and valleys. Wherever you see a valley dip, this is a place where price turned and went and reversed. This is also in the same area here. It's a place where it kind of slowed down, made into a chair, right? You can do that. That's also a support and or resistance area there. So now I'm putting it back on candles so we can see now in this area, we've got 286. So now if you're thinking about for the week, you've got a few more days. You want to keep in mind how hard does Microsoft move. I sometimes will use this, if I'm looking for this Friday, I will use this implied volatility number over to the right on Thinkorswim. It says it can go plus or minus 5.8. So then you can use that as the market makers or whatever are saying they believe it won't move more than 5.8 going up or going down. So I would maybe subtract that from the 288 here. We looked on the chart. If we subtract the 5.8, or let's say we subtract 6, then we're at like 282, which puts us right down here where this support was. Yeah. And then there's another gap. There's a gap that right here that needs to be filled just below. That's 280. I would keep all those things in mind. And let's look at what will be some numbers. If we're looking at put credit spread numbers for this Friday, I'm changing it to single. For your delta goes 280 as a 12 delta. We just talked about 280, 282, somewhere in there. 282.5 is a 20 delta. So I think either one of those could potentially be good trades. Let me turn it over to verticals. So if you want 280, 282, this 2.5 spread again, this is going to bring in $31. $31 of premiums for $250 minus the 30. So $220 of collateral. Or you can do 277.5, 280. Notice the further you are away from current price, the less you're going to get in premiums, right? Because you're basically quote unquote in the safe zone. If you're at you're at SeaWorld and you're sitting right next to Shamu's pool, you're planning to get a whole lot more water. You're going to get a whole lot more water taken in than if you're sitting, 8, 10 things up there. It's going to be less water up there. That's thing we got going here. The closer you are to the fire or the closer you are to the swimming pool, the more likely you are to get wet, right? Same thing's happening right here. So 280, 282.5 is good. If you could give it some more time for the week if you wanted to. Or, pick what you like for the trade and put in the amount of money that you like. Let's say you really would rather take in $40 for this trade. Like I'd rather take $40 for my $250 of collateral. Then what you do there is you set the trade and then you just put it on good till cancel. The trade will sit in your working queue until price gets there. If price, when and if price gets there, then it'll pick up the trade. That's how that goes. Yep, that is how that goes. Coolly high. You did 280 support. Yep, 280 support will be good. 280 will be a good place to do that. All right. All righty. So that was fun. That was fun. So I'm going to wrap us up, and we'll come back later this week to see how all this stuff played out and see what the market did this week on the trades that we were choosing, and see how that went. That's what we'll do. All righty. Thank y'all for joining me. Please don't forget to go and like and subscribe to the YouTube channel. Join me over there in Educator to Trader in the Facebook groups or any other place you find me. Go ahead and just follow and join and all the things that people do. All right. All righty. I'll see y'all in the market tomorrow. All righty. Bye.